because it could be very time consuming. First of all, we have to go again to 3 days, because I started with this time frame to draw the boxes, and it's better. I will not need anymore this circle, so I will hide it. As you can see, I have everything very well organized here. When you do these kind of operations, especially when you have one box, the other box, this box is the same, so I will remove now the box that we have drawn together here, and also the 2 fib that I will not need anymore, because I have everything in this first Gann box. So this one, I will hide the spirals, leave just the box, copy, past the box, and moving it on the right side. How I can do that without bothering about lining too much and having errors and mistakes? First I draw 1 and 2 lines. These 2 lines delimiting the first box. Then I use another tool that is here, which is time cycles. And I start drawing a circle here. So I have a 1, 2, 3. These are squares already, so I don't have to bother about getting crazy with squaring and being precise. I will draw 4, because a square of a box, to square a box we need 4, and I will have, again, I can have both 1 and 2, selecting both with control selected, and I will have the other 4 Gann boxes, like S. Okay, it's lined up. So at this point, I could just follow these kind of boxes, and on these boxes I can draw the whole box extended, because I know now that this is a line of 4, and I can have another line of 4 and have a big box here. I can also draw the box freely. The aim of all this activity is to have everything already perfectly selected to do our next compliances, and to go for that I should line up this cross that is here with this one. I will go in detail. I have a cross here. I need to align the cross with the previous line of the triangle, the rectangles, the boxes, and to comply with lines. So this should be the same level, again here. And I have the big guy. This big guy can also be retracing the friendly spiral. I will leave the big one just. I think I already have the big one, but let's see if I have it, the third Gann box. Yes, it's here. So the same way I did earlier, I will use the retracement, touching this as 25, but I can also, knowing that it's because I need the golden retracement for both, so I need this 07618 here, and with the channel I need the other, not this one because it's a time zone, but the fifth channel I have the other similar thing. So I will need to line up here with this part and these other parts here at the box vertices, and now I have my 0618 here. So fib spirals, nothing easier than drawing things with the right tool. Yes, okay, here here. I can Control C, Control V and line up to the previous one. So setting it on this way and having the double click and removing the counterclockwise. In this way we have another retracement for the future. It's very far. Maybe we will never get here because it's something very high, but I think that we will in the future need that kind of retracement. So we have the intermediate here because I already did that. The first one that we have from the previous activity, let me check if I can do that. Okay, so it's everything we needed is here, and we have just the spirals, why not? So we remove everything like the Gann box, feed channels, retracement, trend based. This is another kind of beast that I have to explain why. Okay, removing this one, and this one, and leaving just the spiral. I don't know where the error is, but probably in the context done now, because I didn't have the circle enabled when we draw this manually. So I will remove everything related to time circles and similar things because we already did together, but I will leave these two spirals here. As you can see, we have levels that are very important because we can also draw, let's see, horizontal line, draw one. We already faced these friends. Another friend will be here. We already know an example. If we want to forecast a trade for a next all-time high, we know that these levels are very, very strong levels. They have been able to reject a potential new all-time high trend with a move that is not a joke, because look at this red candle. That's very, very powerful. Now let's go to daily again. What yesterday was not say tricking me, but leaving me in a condition of saying, are we going down or not, is this area. When you enter this area in the daily time frame, in this case, entering the golden retracement, and you are not rejected effectively, it could be something that could really change. So the price could take this line and exit the current disaster and go out and up. But if you reduce and go for auto, and you go back to the point that I said is very important, you are back to the point where this line is still rejecting the price. So we are not inside this. It's something that you can, let's say, you have to learn about TradingView. It's not perfect for this kind of scaling, but you just have to remember that you can reset everything going for auto. Once you have auto, it's everything distorts and moving, so it's giving wrong informations. As you can see, I can cross this. But if you go scrolling down with your mouse wheel to the lowest possible parts, we would say unzooming to the maximum points, and then locking the price again here, lock price to bar, you will see that it's again our friends, the trend. And it's very important to consider there is another way to spot the trend reversal, which is very important. Now we will consider that very briefly, and it is using the bars instead of the candles. So let's remove everything like this. The lines that we spotted, for the moment we don't need that. We should name them with conventions, because if you leave horizontal lines there, like I do in other charts, then I see them, and I don't know why I draw those lines. So, or you name or you delete generally. This is our price action, how I can spot the trend reversal. So without going to the 3 days, let's see, moving to bars. This is a very, very interesting point, because if you move to bars, I will switch to 3 days to let you understand how it's a reversal candle or a reversal price action really showing us as something. This is our friend, the reversal. What are the characteristics of this reversal candle? It is, first of all, lower. Here, it is lower than the previous red candle. Second point is that it is upper than the other one. If you search for the same pattern, you will see that this specific pattern, I mean low, 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 high, is something that you will not find wherever. Especially if you add the regression trends tool, this one that we used earlier, and you will see that this is complying with what we are saying. This is ascending trend, while this is descending trend. So this is the main concept for retracing the golden Fibonacci spiral, which will give us the most important resistance of a trend. This is still an uptrend, so our considerations until now, starting from here, ending to the current candle, is valid also. Let's go back to normal candles and to, why not 1 hour? Let's go to 1 hour. I think that, yes, okay. So in 1 hour, as you can see, I can extend a little bit more these friends, but it's still an uptrend. And the advantages of using this kind of regression trend bands is that you have the highest point of impact of the price action in these bands. But we broke brutally down. So this is something that is changing, and it's changing consistently, not just on the 1 hour or 1 day. We are on 1 hour and it's completely not consistent with the current levels. So let's do this. Adding a band to identify the current move of the price. Let's go from here. Okay, let's go from here, let's say. Here it's straight, a little bit more down. Here it's completely down. Let's go here to see impressively down. And with this down, we are not able to include this spike. So this is an event that is forecasting something that possibly will impact in the future at this level again, because it's a very, very big candle with a big wick. So when you have price action like this, it's very easy that we are going up again. It is possible. When you see this formation, we are going sideways hourly now. So if we move this here, we are still in a little downtrend, but sideways. As soon as we move here, the trend is still downtrend, and here is an uptrend. So in the last 7 hours, compared to the previous move, the trend is apparently recovering. But it's not reverting, because this wick is very wider than this one. So we don't have reversion here, reversal. And what could happen If we go to the 4 hours, when you have such kind of price action, you should consider that it's very hard to identify the sideways, let's say, resolution. You can use wicks and candlestick patterns. In example, this is an initial morning star, failed because it's red. And this is something that is ending, but it's a hammer. So this hammer, if in 3 hours we close this as a hammer, possibly will rise the price a little bit upper. But it's not mandatory, because look at the hammer here, how it was, not green or red is the same, not important. But sometimes, especially on crypto, this kind of price action and moves, like this hammer here, which is a big hammer, green hammer, is producing a price downwards. And these other two, so they are negated, these two hammers. It's very hard to predict the price action on a crypto asset just using the candlestick patterns. It's easier on Forex or stocks, why not? But crypto is quite complex because there are many algorithms buying and selling depending on the retailer's action and so on. So what could happen here? Let's switch to another time frame. Let's go to 144 minutes because it's a specific number. Here it could form what they call a cup, but with no handle, and still a wick here. So let's reduce the time. But why I'm reducing? Because I want to spot the diamonds. Here I have a similar shape to a diamond. I will show you why I'm searching for the diamonds. As you can see, I'm moving 5 minutes. It's similar. So let's say 30 minutes to start having an option. Let's search for a possible diamond and the shape of this diamond. Let's start from, let's say here, going down to here, up to here, and down to here. And we see that it's not consistent, so let's invert these two. This is possibly something interesting. We found that this is the end of our diamond. This is something that could extend up to here until we have green. We are on 30 minutes, so it could change. This could be also here because it started going down from here, and this one could start here to have symmetry on this diamond, or here, why not, at the lowest part of this candle, because if we go here it's too much and here it's truncating. So let's go here. Now it's very easy when you find diamonds to understand how it could resolve. Why? Because here you have just waves. I don't go now into the Elliott waves, real waves, but let's consider this wave, this other one, and the entering to the diamonds sequence. Now the diamond, it has some strange lines, but let's set some evidence on the price action, which is given from this kind of Z. Now I'm sure that everyone looking at this and having a little bit of experience with price action will exit this form this way, because this other way is just a continuation of the diamond. And to continue the diamond, it could be, now I will show why, to continue that diamond that way, the diamond should be of this shape. In that case, the diamond will resolve upwards. But when the diamond is a Z in this direction, so entering, going high, low, high, it's obviously something that you deduce that will go this way, because the continuation of this line is not another line, another impulse, it's a correction. While in this case, you will be entering maybe the same way, but the difference will be that instead of having the enter like here, you should have this enter. And if we go for, let's hide these diamonds and try to use this shape to see if we can have an upward move of the price action. Sincerely, if you look at the candles and you go here and you are searching for that, this green move will only terminate here this way, not here, because you have something that is going up and down. So it's not this one, it's something that by experience you have learned, you can learn about the price action. And personally, I did some big investigation on this in the previous cycle of Bitcoin around, let's say where? Here, it's full of diamonds. And now, with the diamond, I can understand that this current price action, if I want to lose my life analyzing Bitcoin, because it's not mandatory really, at this moment it's better and sane for your pocket to avoid trading. But why not studying the current action and do some forecasting? So what happened in this case? That if I go down this way, why this way? Because it's the same wave, I could also replicate the upward move here. So we could go back to 50. We have to see. There are many conditions. This could be a backwards impulse wave of Elliott wave 1.5. So it could be a downward move and not a correction. Not replicating this entry point, because this could be, we spotted a trend reversal, but we can also consider that we have other kinds of structures apart of the diamonds that we should consider in this context to start understanding. An example that if we apply Elliott waves and we go to, I know 4 hours starting, this 4 hour is quite interesting because, you know, I will show soon the other peak with the fall. Look how this could be 1, 2, and then I will not retrace it, but the move very hypothetically could be, let's retrace here, why not, could really be this kind of action going down here to 35, 34. So it could be, why not? And it's in line with the shape, maybe too much exaggerated or critical, but not impossible. I think it will be a little bit gradual, because we are still producing. Another point very important is that if we look at this trend, also we have a broken point here. If we draw some horizontal line at this point, this was the lower high, and then the new lower low. If we compare this lower low with this one, we already broke this trend. So this, starting from here in example, although we don't see the fall, the lower low is already a new lower low, and for this one too. So all of these trend set is already broken. This is a lower low that is reaching, if we want to be precise, because you can do that. Let's check the number, the real number. Here we have a low at 4280964, and here we have 42820. So we already broke this level. We are on this level. If we broke this level, the trend is starting here, being sideways. So these points, we already broke this. We need to start from here. Although we have a shape on the regression trend that is ascending because it's an average of everything, here we had the broken point of the higher lows produced during all this price action, and we have the contact point here with the green candle because the red was higher. So it's very important to establish this, to understand that this is not a correction. This is an important trend reversal. We should do a circle here and do the same for what we did from here. It still doesn't present the same shape of reversal like this one. As you can see, that it's like a camel. Should be a camel reversal, but it's not at the moment. So we don't have a real reversal pattern, but it's very near to be. We just need some U shape, let's say here, to confirm this kind of action and have a reversal, which would lead our price action under this trend reversal on this resistance line. So practically moving our current context a little bit far from our moment of reversal in July, but ready to go for this point, because this will be the next check. So as you can see, if you do this kind of evaluations just to pass the time and spend some time on charts, you will see that this action today that we have seen as a big fall is not a healthy correction, absolutely, because these were not healthy corrections. These were drop. We had something like this on the first reactions of the price. How can we spot this? With some indicators like the Keltner Channels on daily time frame. And with the Keltner Channels daily, we have a very interesting set of bands that are not like the Bollinger Bands, but more oriented to a sort of supply resistance. As you can see here, when we are in an uptrend, the price is generally up the third upper band. When you have retracement and correction, it enters the band, touches the lowest, and restart going up. This is for the whole bull market the same behavior, and it's very useful to take profits and enter again, because if you consider that you will see a drop when you touch the upper bands of the Keltner Channels on daily time frame, it's time maybe to exit your position and to prepare to enter down. Let's do an example, because it's very important to compare how I do an example. I would exit here on red or here on green. I don't know, maybe I would exit here on red when touching the Keltner band. Let's use another kind of line. This is not related to the golden ratio, but it's a strategy to reinvent yourself. Let's go this way. So I exit here when I touch this. It's risky because as you can see there, oh, I lost some money. No, not important. I will enter again when the price leave the Keltner channel. So let's say we are daily, let's be honest. And here, let's enter here. Honest because you could hazard the entry here, but it will not correct with your strategy. You have to be consistent. Then I will follow the price again. Okay, we're going up, 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 boom, exit here. Bull market, remember. Entry again here. My strategy was complying with what I decided. And again, up, up, exit here. I will not draw everything because it's useless. Exit here, entry here, exit here. These are wicks, so I will exit on body touching, not on wicks. Big wicks here to exit. Exiting here, I will re-enter here. As you can see, re-entering here, I will never have the option to spot the exit because I don't have candles. But if I do the whole analysis and I discover that on 3rd of March here, I have the reversal candle, like the one I saw here, because it's here, it's the same. I will be able to prevent strange move. So here I would exit. Here maybe I would not enter. I would just exit here and take profit 1. So let's say 25% of my action. And then here I will see that again I can take profit here. Again. So let's put some price labels. I will take profit here, very near to the all-time high. Take profit here, this critical region, here. And let's leave this for the right people that want to understand how it works. Here, my last profit. I should re-enter here, but there was a trend reversal. So here I didn't re-enter because I decided to take the 25% and here maybe here the 50% and here the other 50. At this point I have no profits anymore and I am out of my positions. If I decided to exit 50% here and 50 other percent here, I am out. So I'm free now. I'm looking to the drop. And at this point, I have to establish when to re-enter this drop. And I will keep using the Keltner channels, but I have to be honest, so I need to wait for this reversal. I will lose all these bands. No way. I could use other tools, but if my strategy is based on this kind of strategy of the indicator only, being consistent with my strategy, I have to wait after a reversal to exit on a reversal to enter, because otherwise I will enter here, and if in this case the price we were expecting to go to 19 here, entering would have been a wrong opportunity. So I will leave this channel, but I will enter on trend reversal exactly here. And as you remember, I enter on trend reversal and then I do the same here. So I exit on my candle here, touching the bands. And I will not re-enter here. I just have one trade because here I could enter at this point, but I've never had the touch of the lower band. So it's like a possible bull run. I will not enter here. I will activate my sensors to spot a possible reversal or a contact to the lower bands. So, like in the past. Without these contacts, it's just a trap. So this moves, I'm not here, I just had one trend. This trend, consider that it was a bear market trend, because this is a bear market, not a bull one. I earned 21.6%. Now, unleveraged could be something very poor, but if you have $10,000, it's not poor. It's $20,000. So if you have $100,000, it's $20,000. So it's not poor, not a bad trade. If you are playing with $100, just $20. But it's not a just. Sorry. So at this point, just one trade. While other risky people could have been earning double, 76%, but now they are crying, because the problem in the bull run or in the bull market, starting or not starting, is that the euphoria will kill your pocket. So at this point, I'm sure that in our group that we are talking about this since this time, since June, about this, there are still people that are crying because they left position here on the altcoins and similar things. This was an exit absolutely here, and when I traced the rectangle, I don't remember what it is because I have so many charts, but when I traced a rectangle, I had a no action rectangle, which was based on the retracement, but also on the safety of these Keltner bands. If I don't have 3 confirmations on this trend, it's not a good trade. We are not trading a bull market, we are trading a bull trap probably. Probably, not surely, but very probably. While in this case, I would have been earning very, very large amount of money for 500%, to risk my pocket for 70%, no please, I prefer the 20%. I already earned my money here. And eventually on shorts here, but I don't like personally to short. It's something that if you are fine with, you can do that, but it's very risky, and if you lose leveraging the shorts and similar things, you are losing money. So it's something that I think that finally will not pay really good money. If you consider that my only trade could have been this one with 20%, let's say. Shorting, I would have been earning, if respecting my position here, because the strategy already has the long and take profit, but we can also have the shorts. When we have a retest and it does not comply with the breakout like in the past, I can short here, but I need confirmation. So where would I short? Of course not at the top. This is something that people are always doing a big mistake, entering the short at the top. It's very risky. You will need confirmations. You will need to enter the short at this point, when you are sure that the short is going down, because you have the Keltner channel with the band, let's say enter on the middle band. And if I activate the RSI, I will see it's pointing down, the Bollinger Bands and similar other things that are confirming me that this is a short and it will finish down here. And as you can see, always using this Keltner band, I also have the exit point for this short, because I based my short on the center band, and this is daily. I'm not working on 15 minutes. And when the candle touches the lowest band, I will exit. I will not be exiting here, so incredible and not so perfect. But my trade is successful, my profit too, and my short was a 43% safe short with night sleeping, with no problems and so on. just because I followed a simple Keltner Benz strategy without adding RSI, moving averages, and other things. If you follow a strategy, it's named the trading system. You have rules, and if your rules is just a set of following 3 or 4 principles, but it's well done, you will be winning those trades. And this trade is verifying now on 12th of May, and maybe we will not see for 1 year again. So when they say, how I trade today, what I buy today, nothing. Go buy a coffee, it's better. Because not today or not every day we have trading days. We can have weeks without trading. But if your trade is the first one, 500%, the second one, 43%, and the other one, 20%, you in 1 year earned 650%, which is a good amount of money. If you are working on this, you did 3 jobs, 3, not 365 jobs, 3 jobs. 1 long trade with exit points, and a big short, just one, the less risky short. Now the long on the bull trap, and possibly why not preparing a short here, but remembering what we said about the Keltner bands. Here we could or not, namely not, because we had the price action over the top band. So this could imply that we are at this point. So we could go again up and shorting here to recover this S and exiting here, but on which strategy? My strategy is supposing what we discussed earlier, so I will not generally comply with an entry here and an exit here necessarily, because I would have been shorting from here to the other point here, but it's because we know. But where is the contact? I would have been exiting here. I'm not interested in risking this short, because if the price from here will follow this action and stop here, we don't know. It could. This is a long, wicked candle. It's done to trick people, to steal money from people and to generate liquidity. I don't want to be there. I'm not interested in this candle, because one candle could affect my year or revenue, while me with 1 year and 2 trades more, I'm fine. So this is very, very important when you consider how to do that. It's not important to follow 3,000 strategies. In example, Afsa, your RSI discussed with me with 3 bands and similar things could work very similarly to Keltner Channels, because it's quite an indicator with the money flow index. I don't know how you
Um, uh,
follow that.
have Fab, do you recommend a time frame to use the Kettler channel?
Daily,
Okay,
always
all right.
daily, because look at how glitchy it could become on hourly time frame. You have continuous out and in of the band. Look at this, and it will be full of trades like the speculators or the guys using leverage need. So it's could be, but it's algo trading. You need to write some code, because to watch at this constantly by eyes and have trading strategies on this not automated could be very time consuming, and finally you are splitting my 20% trade in 10 trades of 2%, just because you are leveraging and you are thinking that you are earning 200%, but you have to cover margin, you have to do many things. While in this case, if I do my trade on daily time frame with Keltner Channel, which is an example, I generally trade many other systems, but for Bitcoin I like the Keltner bands on daily time frame because I don't have to bother about up and down and similar things. Of course I lose occasions. I could add more indicators and follow other strategies to include more trades. But 600, 5,000, 50% yearly on Bitcoin, I think it's enough. Because the other revenue could be how much? 700, 800? It's not that much. It's too much risky. The risk is higher, and if you fail because you are trading the more, I think that it's not really good to stay with two small trades, which increase the possibility, the potential for mistakes. So generally 1 day, also 1 week, it's extreme, of course, but weekly is maybe 2 trades a year. But look, if you entered here in the lowest part of the because you can switch in weekly, you can consider that when the price from up goes down under, you will take the re-enter, so here, and then stay until the price re-enter, so you will exit here, more or less. And then for the short, by not entering here, exit here on the bands, and entering here for the long, exit here for the short. But it's weekly. Are you able to avoid watching the asset for so many time without putting your hand on? If you are able to do that, it's a long-term strategy, very well, very nice, and you will not fail because it's quite, let's say 90% based on something or some parameters that are simple to manage, up or out or in the bands, touching the bands or not, and so on. So you have one from 2020 March, you have one trade entering here, you exit 1 year later, or on 3 of May, maybe, no, here, on 19 of April, earning, let's see how much, entering on the bands, exiting on the bands, here, 754% bad trade. It's something that's really bad. And a short, here, entering, exiting the short, 36%. As you can see, shorting is just a risk. I don't want a risk, but I could long, because using the weekly time frame, I see the touching candle here green, and I will enter here and exit on the touching red here, or maybe, to be honest, on the re-enter, but yes, on weekly it should be this one. We have to be honest. So I will have another 52%. In a couple, and here 1 year and 6 months, maybe, I have 1000%, almost, not 1000, but 830, 850%. You know that if you had $100,000, now you are almost near to 1 million in 3 trades, which is something that I will always focus on. The trading is a sickness. The investing and trading with strategy on not long term, on terms, because these are terms. We are not on ants. Ants will trade on 1 minute because they are ants. They live 15 days. But we have years in front of us, if not a disgrace or an asteroid impacting Earth. So why not using these kinds of ideas? And especially because, look, many people entering here and closing here and entering here and closing, entering, closing, now are stuck here because we are going to the downtrend and reaching our 200 weekly moving average, and they are losing money, and it could be something that could stand up to February of the next year, but in the worst case could end, because crypto market at the moment is going up. We are in an uptrend. To be comfortable with the current state of the market, you can do this. Why not? Starting from here, what's happening to my money? Fantastic, it's going up. But you exit here, 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 entering again. You are just going sideways compared to the trend, because you played against and with the trend, but without a real strategy. This is a strategy. I enter on the lowest parts, I exit on the highest parts, and how do I spot my entry? I want to buy the bottom. Well, to buy the bottom, you have to wait for the Keltner channels to be in that condition. So, that condition never happens yet. This condition never happens, because I just have wicks. So I'm waiting for that condition. It could be at this level, at 20, but never happens. So if my strategy is to go and have, I don't know, go fishing while I don't have this condition, I will be a fisher for 1 year and a half. But when this is verified, and it could be on November, December, or at the moment, if the price will not perform this action, but just this one, maybe, look, one could say, here is my risky entry point for the lowest part. Really, it was not a bad idea. It could improve or increase your risk, but give you this strategy is similar to what we expected here, because we had a red and a green. The green was never out from the band, but we include some tolerance. So we decided to enter here, and sincerely, entering at 35 at the moment as a good strategy. But this entry is a little bit higher compared to what the market should produce, especially because of this support here. This was a resistance turned now support, and it's something that you can see by your eyes. You don't need to be a machine or a robot to understand that this is a support now, and we have to go there somehow, and you have others here, and this is weekly, so there are less supports and resistances. But let's say you have another here, I don't care about that. I will consider this support for this price action that we are in now. We have 3 supports on week. What could happen? At least here we should retouch. For the Keltner bands, for many other things, when people say no, just up only, it is possible. Up only is something that will persist for some time, but it already happened. Now it's not up only. Here it was up only, but then we retested and it was down only, and up only again and down, and now it's up only and never down. This down is like this one, like this other one. Look at here, we have the same condition. Almost better. This green candle was out after the red, the bands, and I would be entering here, and it would have been very tricky to exit here, because I remember this was 2 weeks tragical sideways. If you switch to daily time frame, that was really hard to survive. This price action in the 2018, this was something that it was a diamond, as you can see. This is diamond going up and reducing down, and exactly for this range. So people here were all expecting the other retest, but look at the squeeze of these bands. When the Keltner Channels squeezes, you can have generally, like the Bollinger Bands, a move. We don't know which kind of move, but it's very important to activate sensors when you have the price in range of the squeeze. In example, here we have the squeeze. Until the price is in the lower band, it could go down, so you don't have to have positions. When the price is up, it could go up, but you will not enter positions. And here, if you are doing fine, all of these sideways terrible one, and you are also considering that, as I shown earlier, this is a diamond that is done this way. And if you look at these diamonds, you can imagine how it resolves, because it will resolve like a diamond, like this kind of diamond. We can switch a little bit more, but this is real price action. Reducing it, why not? Let's reduce. But it's up, down, up, and after the up you will have the down. It's not, again, to focus this kind of diamonds, which would have been resolving the other way. I mean, entering, going down, up, up. Diamonds are really easy if you study them correctly, but they are very tricky if you just look at this. Also, this one is an up, down, up. So after the up, down, up, you will have a down. And here is the down. You will never have, in this case it could be tricky, because if you look at this, I'm sure that 100%, not, but 90% of people, when seeing this diamond, will say, well, it's a diamond, so it could go up. Look, we have these parts, and it will just replicate this part on the other sides, and we will go up here. And this is 90% of the people. But it's not that way, because this is an up, down, not up. So when you have diamonds, just remember that it's like the W pattern, the whatever you want pattern that is following a logic, and where you have something that is going up and down, the logic is to follow a zigzag, like Elliott waves, not let's say a new way of doing waves, sometimes powerful, sometimes not. If you are in doubt, separate the diamonds, because generally diamonds are really complex shapes, but if you separate them, you will see that they are not so complex like a myth. I will see if we find the current action of Bitcoin on diamonds. The other, you can see here why it's complicated sometimes, because you have to understand that this one is not the shape that you are expecting it could be. But the action of the price is that from here I'm going up to this vertex, and why not saying also this way that it's zooming is very hard here, because it's an old price, yes. And so this one will not be here, but here. And here the continuation will be at least this length. So if I take this length, I know that from here I will have at least this price action. And it's not perfect, like everything. Maybe I should have been starting from here because it's a composed diamond and so on. But it's better to terminate here rather than to expect to go up here because it's a diamond. So use logics. You will see that nothing is really written in a bad way. Is price action. So zigzag always the trend is leading the bands, the channels. What do you think, Afsa?
I think it's fantastic. But we need a break now.
Yeah, no problem. I need it too.
Yeah, we it's been 2 hours.
Yeah, 1 hour 59. It's written here.
Yeah.
But you are alive, so I'm really happy you are.
Thank you very much. I really enjoyed today's session and